Hello everybody, welcome along to the Forex Farm. My name's Paul and I have been really surprised with something I've uncovered and it's to do with trading gold. Have a look at this. So here we are on gold. And it's on the 1 minute time frame. Now I've done some back testing as far back as I can go on the 1 minute, which isn't particularly far. I think it's like 2 weeks or so. I think we'll just keep going back and I'll show you what it is. Now I released a video the other day talking about a strategy. So it's to here, a strategy where it works on any time frame, it works on any pair. And it's basically you're looking for the price to go up, and then there to be a liquidity sweep, and then a higher high, and then you'll take a trade. I've sort of refined it somewhat to one trade a day with a better risk to reward ratio. So essentially what we do here, you'll see I've got some sessions up here. I've got now this is UK time, so this is GMT. But essentially I've got the Asian session from 5 AM GMT London time to 8 AM, and then we're marking out the high and low. So we've got a high up here and we've got the low down here. I haven't marked out the high because, as you can see, the low got swept first. We just wait essentially until one gets swept, which is the low here. It gets swept like that, and then we're waiting for a sweep of liquidity in the opposite direction. So we've gone short here, so we're waiting for that to get swept. It doesn't, it goes lower, so we're waiting for that to get swept, which it does here, and then it carries on, and then it comes down. Now all we're waiting for then is for price to trade below this swing low here, which it does here. So as soon as we get that, we can draw our Fibonacci. Now I've slightly amended the Fibonacci to these points here: 10%, 20, 50, 80 and 90. So from there to there, and then I take a trade on the 80%, or if I'm going long on the 20%, and the stop is at the 0.5. Now on this trade, and we go for a 3 to 1. Now on this trade we lose, as you can see, just but we wouldn't have, well, yeah, I mean, we wouldn't have made it to 3 to 1 anyway on that particular trade. But that's it, essentially. It's one trade. Doesn't work. Hit stop loss. We wait. We move on to the next day. Here's the next day. This is a loss as well. It's not a great start, but I'm showing you absolutely everything. So we sweep the high first, as you can see. We don't sweep the low. We sweep the high. And we're waiting for price to trade below a swing low, which it does here. Then it goes a little bit lower. Then we're waiting for price to trade above here, which it does there. So we can draw our Fibonacci from the low, from the high to the low, which we have done, and we can see, actually I put that in the wrong place, it would be there, and that would also be a loss. So we're down 2% already. Not a great start. But fear not, we just keep going. Here's the next day. The lows don't get swept, the high does, as you can see. High gets swept here. We trade above. Well, sorry, I lied. The high actually gets swept here. As you can see, just. We trade below. Now we're waiting for a sweep of liquidity to the downside. So as you can see, we've got a sweep here. Down there, that's the sweep of liquidity. Then we're waiting for a trade above, which we get here. As soon as we get that, we draw our Fibonacci from the high to where it swept liquidity on the low, and we enter on the 0.8, stop on the 0.5, 3 to 1. That plays out. So we are now 1% up. We've lost 2 trades with 1-1. We're 1% up. Great stuff. And we keep playing price forward to the next day. And again, here we are. The low is all the way down here. The high is all the way up there. The high gets swept here, as you can see. We go up to the top there. we do sweep the lows, but as you can see, we don't actually trade above until we get all the way over here. So as soon as we trade above, we can draw our Fibonacci from the high down to the low point, which would be here, but we don't get triggered in. Price just goes off without us, and that happens sometimes. No trade on that particular day, so we're still 1% up. Here's the next day. There's the high there, 7.59. Where does it get taken out? Well, interestingly, it gets taken out at 8 AM on the next minute. Just, you can see there, just tiny little wick, but it takes us out. We're heading down, taking out lows here, taking that low out, then taking that low out. That's our low point. We wait until we trade above, which we do here, then we draw our fib. We go from the 0.8, which that's not right on the 0.8, that is. There we go. And we're doing a 3-to-1, which we get there. Beautiful trade. We're up 4%. We are now up 4%. We move on to the next day. And here we are on the next day. There's our low. We get taken out on the low there. We're waiting for us to take some liquidity, which we do here. The liquidity gets taken here. We're waiting for us to go below there. We do here. Then we're drawing our... I see, have I done this one wrong? I think I've done this one wrong. Let me have a look. So we break there. We're waiting to grab liquidity, which we don't until that's taken. And then we go below the low there. So that should be drawn from there to here, like this. That's right. Yep, and then we enter here with our stop. Okay, we're back. Sorry about that. So yeah, we would enter here, but as you can see, we would be taken straight out on that one. So we are now just up 3%. Let's move on to the next trade, which is here. There's the low that gets taken out. Come down. We're taking the liquidity. Where do we take the liquidity? Let me get in a little bit closer and try and figure that out. Where are we? Oh, here we are. Yes. So we take liquidity here. As you can see, that's a swing point. We've taken that liquidity, so we draw our fib from the top, from the bottom to the top. As soon as we trade below here, which we do there, we can draw it. We set our order at the 0.8, stop at the 0.5, 3-to-1. So we're 6% up now. So we're looking good, 6%. Let's have a look at this one then. So what happens here? So first and foremost, we take out the high, as you can see. Up we go. We're looking for a run on liquidity, which we kind of get here. We get it here, we get it here, we get it here, we get it here. But we do not trade, as you can see, above this high, but we do trade below the low, so we can take a short potentially. So we come all the way down here, we keep going lower, we take out liquidity right there up to there. We then trade lower than our lowest point here, which means we can draw our fib. We enter again on the 0.8, stop on the 0.5, 3-to-1. We're 9% up now. We're 9% up. We've got another trade here, look. We've got our high here, we've got our low there. Let's just draw the draw that in. I don't seem to have done it. Which is that, as you can see. So let's have a look what happens here. Right, so we trade below, as you can see. Then we're looking for our run on liquidity, which we get up here. We're waiting for us to sell below here, which we do there. As soon as that happens, we can draw our fib from here to here. We can enter on the 0.8, stop on the 0.5, 3 to 1. We're up 12% now, so you've already passed stage 1 of your funded challenge. We're up 12%. So let's say we've already passed phase 1, so we're up 10. We're up now, let's say 2% on phase 2. I know that's not how it necessarily how it would work, because that last trade would have, let's just add it, we're up 12%. Let's not make things too difficult. Right, so we're waiting for a run here, which we get right there, as you can see. We are now waiting for a run on liquidity to the downside, which we get here. It keeps coming down. We're waiting for it to trade above, which it does here. As soon as that happens, we draw our fib from here down to here. We enter on the 0.8, stop on the 0.5. Is that right? On the 0.5 here. We're very unlucky that we don't get tagged in here, but we can keep it in. We're very unlucky that we don't get tagged in here, but we can keep it in. And look, we get tagged in here for another. I mean, I've got this at 4. But it'd be 3%, another 3 to 1 here, 15% up, and we carry on. That's 15% so far that we've made, which is pretty good, considering we're only taking 1 trade a day, and we're up 15%. Right, next one, we take out the high here. I need to be writing this down because I will forget. So we're plus, should write it down on the screen really. So we're plus 15. Okay, that pen doesn't work. Do we have a pen that works here? Plus 15. Okay, right, let's have a look here. So we run the high here. We're waiting until we get a close, taking out some liquidity, which we do here. Look, as you can see, we also do here. Come all the way down. We're waiting until we trade above this, which we do here. So we would then do our fib again from the high to the bottom. We would enter. And we would put our stop in here, and we will be stopped out. So we're 14 up now for the month, 14% up. Let's have a look at this next one. Do we get a trade here? We do. It takes us a while though. Right, okay. So we mark out our highs, we mark out our lows. There's our low there. We trade the low first, but as you can see, price traded below it. It never came back and traded any further down, so we would never take a trade there. But as soon as it took out the liquidity at the high, we can start looking for trades this way. So we take it out there. We're looking for a run on liquidity, which we get here. You can see here we get a run on liquidity there. As soon as we trade above the high, we can draw from the high to where we took liquidity, and 3 to 1 there. So 17% up now. Let's go to the next one. Here we are. So we run the liquidity here to the sell side. We're waiting until we run liquidity on the buy side, which we do right here. We're waiting until we close below there, which we do right there. So we can draw our fib out like this, and yeah, that one would be a loss, as you can see, because we would take it there. I mean, that's a very tight stop loss. But that would be a loss. So it would be plus 16, I think that's right. It's 14, 17, plus 16. So we're plus 16% so far. Let's have a look here, what's going on. We'll just write that down, plus 16. So here we run liquidity here, as you can see. We wait until we get a run on liquidity, which we haven't done yet, but we do here. That's a run. We're just waiting until we trade below there, which we do. Is that right? Let's have a look. Yeah, okay, that's it. Yeah, we trade above here. We're waiting until we close below, which we do here. We're drawing from the bottom to the top, and we are... I'm confused here because that looks like it's won, but I don't think it has. So let me look at this one again. Now, I was doing these very quickly, so I may have made a mistake here. So we traded below. We haven't run any liquidity yet. We trade lower. That's a run on liquidity there. And we trade lower there. Right, let me redo this. I think that it will be from there to there. Yeah, and I think this one will be a loss because we would trade down there, then we would be coming in here. That would be a lot. Yeah, so that one there would be a loss. So we would be plus 15%. Let's keep going. Plus 15. Right, where were we here? So we trade above the high here. We're waiting until we run some sort of liquidity, which we do, which we kind of do here. Do we? There? Would it be there? Let's have a look. Yeah, that would be a swing low, which we do. So it would be there like that. And that would be a loss, as well, as you can see. So we'd be plus 14%. So you can see we're taking a lot of losses, and there you go, and that's the month. So we're plus 14%. And how many days did we trade? Let me just have a look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 days, 14%. And that's it. And that's the strategy that I have been working on now on gold. So yeah, in 15 trading days, you've made yourself 14%, which, you know, is pretty good. And you can see we haven't had a huge amount of losses, you know, but because we've had our fair share of losses because we are aiming for a 3-to-1. That don't matter so much. It really doesn't. Because as long as you are making, you know, you're winning, you know, if you're winning 50%, but you're making 3-to-1, you're doing very well. So yeah, that's a strategy that I'm using at the minute on gold, and the numbers speak for themselves. Backtest it yourself, see what you think, and I'll see you on the next video.